Imagine a world with no money. You are hungry. You want a loaf of bread, but you only have a chicken. You must find a baker who wants a chicken. But what if the baker does not want a chicken? What if the baker wants shoes? You must go find a shoemaker. This was daily life thousands of years ago. Getting simple things was a long and hard struggle. People needed a better way to live. They needed something that everybody wanted. This simple human need created one of the greatest inventions in history: money. Hi, and welcome to Daily English Origins. Are you learning English? Great. Let's learn English with a very interesting story. Don't forget to subscribe, like, and comment. Let's get started. Long ago, early humans did not have shops or banks. If a family needed something, they had to make it, grow it, or hunt for it. Later, people began to trade. This is called barter. Barter means exchanging goods without using money. A farmer traded apples for milk. A hunter traded meat for a warm coat. Bartering helped people survive. But bartering was very slow and difficult. Both people had to want exactly what the other person had. People realized they needed a common item. They needed an item that everyone agreed was useful. In many ancient nations, people used animals like cows or sheep. In other places, people used salt or grain. These items had great value. Value means how much something is worth. But cows and grain had big problems. A cow is very heavy. You cannot carry a cow in your pocket. Also, a cow can get sick and die. Grain can rot and go bad in the rain. People needed something small, light, and permanent. Thousands of years ago, people living near the ocean found a solution. They found cowrie shells. These small, beautiful shells were perfect. They were hard and did not break easily. They did not rot or die. You could put many shells in a small bag and travel far away. Soon, traders carried these shells across Africa and Asia. The shells became the first popular form of money. As time passed, human kingdoms grew larger. Kings and leaders built big cities. They needed a stronger system for trade. In ancient China, around 1000 BC, people began to use metal. They used strong metals like copper and bronze. At first, they shaped the metal to look like small tools, like knives or spades. Metal was wonderful. It was heavy, but it lasted forever. It could survive fire, water, and time. The next big step happened around 600 BC. It happened in a rich kingdom called Lydia. Today, this land is part of the country of Turkey. The king of Lydia was named Alyattes. He wanted a better way to collect taxes and pay his soldiers. He took natural pieces of gold and silver. He melted them together to make small, round pieces. These were the very first official coins. This created a new currency. Currency is the official money that a specific country uses. King Alyattes did something very smart. Before his coins, traders had to weigh every piece of silver. They had to check if the silver was pure. This took a lot of time. So, the king stamped a picture of a roaring lion on every coin. The lion stamp was a promise from the king. It meant the coin had a true and fixed weight. People did not need to weigh the metal anymore. They just counted the coins. This introduced a very important concept: trust. Trust means believing that something is true and reliable. Trust is the invisible force that makes all money work. The invention of coins changed the world forever. Trade exploded. Nations grew rich. Merchants put thousands of gold and silver coins into heavy wooden chests. They loaded these chests onto ships and horses to trade with distant empires. But this created a new, terrifying problem. Heavy chests of gold attracted thieves and pirates. Traveling with metal money was very dangerous. Rich merchants lost everything on the dark roads. People realized they needed a safe place to hide their wealth. The world was ready for the next big invention. To protect their heavy gold from thieves, people needed safe places. Long ago, in ancient Rome and Greece, the safest buildings were the temples. Priests guarded the temples, and thieves were too afraid of the gods to steal from them. Later, in Europe, merchants went to goldsmiths. A goldsmith is a person who makes beautiful things out of gold. Goldsmiths had strong metal boxes and safe rooms. A merchant paid a small fee to the goldsmith to keep his gold safe. This was the very beginning of early banking. While Europe was using heavy coins, a great conflict was happening in ancient China during the Tang dynasty. The empire was huge. Merchants had to travel thousands of miles to trade tea, silk, and spices. They used heavy copper coins. Sometimes, a merchant needed a whole cart just to carry his coins. Bandits attacked these slow carts. The merchants begged for a better way to travel. The government and rich merchants finally found a brilliant answer. Instead of carrying heavy coins, a merchant left his coins with a trusted local official. The official gave the merchant a special piece of paper. This piece of paper was a receipt. A receipt is a piece of paper that proves you own something or paid for something. The merchant traveled far away with only this light paper. At the end of his journey, he gave the paper to another official and got his coins back. People called this paper flying money. They called it flying money because it was light enough to blow away in the wind. This was the birth of paper currency. Hundreds of years later, paper money and early banking exploded in Europe. In the busy cities of Italy, merchants set up long wooden benches in the streets. They traded coins and paper receipts on these benches. The Italian word for bench is banca. This is where we get the English word bank. Soon, people realized something amazing. They did not need to exchange their paper receipts for heavy gold. They could just trade the paper receipts to buy food and clothes. The paper itself became money. If you are enjoying this story about the history of money, please take a quick second to hit the like button and subscribe to the channel. It really helps us make more great English stories for you. Now, let's return to the great financial struggles of history. As banks grew, bankers noticed a powerful secret. Most people left their gold in the bank and never came to get it. The gold just sat quietly in the dark rooms. The bankers thought, why don't we lend some of this gold to other people? This idea created credit. Credit means borrowing money now and promising to pay it back later. If a poor farmer needed tools, the bank lent him money. But the farmer had to pay back a little extra. This extra money is called interest. Interest is an extra fee you pay when you borrow money. Credit and interest helped businesses grow rapidly, but they also brought terrible danger. Because bankers lent out so much money, they did not keep all the gold in their safe rooms. They only kept a small amount. Usually this was fine, but sometimes a terrible panic swept through a city. A rumor would start. "The bank is losing money." Terrified people ran to the bank. They all demanded their gold back on the exact same day. This is called a bank run. A bank run happens when frightened customers try to take all their money out of a bank at once. The bank did not have enough gold for everyone. The bank failed, and hard-working families lost all their life savings. It was a tragedy that ruined many lives. Bank runs destroyed businesses and hurt entire nations. The financial system was wild and dangerous, like a great war. Governments realized they could not let local banks operate alone. The people needed a protector. They needed a massive, powerful bank that could rescue small banks when a panic started. They needed a bank that could control the paper money and calm the frightened public. This desperate struggle for safety set the stage for a new giant in history, the central bank. To stop the terrifying bank runs, nations created a new kind of leader. They created the central bank. A central bank is a powerful government bank that controls all the money in a country. The central bank does not deal with normal people. It only deals with other banks. In 1694, the Bank of England was born to help fund a war. Years later, the United States created its own central bank, called the Federal Reserve. The central bank acted like a strong general in an army. If a small bank was in trouble and people panicked, the central bank rushed in to lend them emergency money. This restored trust and saved the economy. For a very long time, all paper money was tied to gold. This system was called the gold standard. The gold standard meant that every paper bill could be traded for real gold. But as the world population exploded and businesses grew massive, there was a huge problem. There was simply not enough gold in the world to support the growing economy. In the 20th century, nations made a brave choice. They cut the chain to gold. They introduced fiat money. Fiat money is money that has value only because the government says it does. There is no gold behind it. The only thing supporting fiat money is the faith of the people. The world moved faster and faster. People traveled across oceans in hours. Paper money was suddenly too slow and bulky for modern life. In the 1950s, a new invention changed banking again. It was the credit card. Now, a person did not need heavy coins or thick stacks of paper. They only needed a small piece of plastic. When someone bought dinner with a credit card, no physical money moved. The bank simply subtracted numbers from the buyer's account and added numbers to the restaurant's account. Money was no longer an object. It was becoming a message. Today, we live in the digital age. Most of the money in the world does not exist in the physical world. It is invisible. You cannot touch it or hold it. When you get paid for your job, your boss does not hand you a bag of gold or paper. A computer simply updates a number on a screen. Money is now just data traveling through massive global networks. This is a brilliant achievement. We took something heavy, like a cow or a gold bar, and turned it into pure information that can fly around the world in 1 second. But the story of money is never truly finished. In recent years, a new conflict has begun. Some people do not trust big central banks or governments. They want a system that belongs only to the people. This desire created cryptocurrency. Cryptocurrency is digital money that is not controlled by any bank or government. It is protected by complex computer codes. Bitcoin is the most famous example. Just like the early days of paper money, cryptocurrency is wild, dangerous, and exciting. Only time will tell if it will become the money of the future. When we look at the long history of money, we see a story of human struggle. We see early humans trying to survive the cold winters through barter. We see ancient kings stamping lions on gold. We see frightened merchants inventing paper receipts and modern nations creating invisible digital wealth. But what is money, really? Money is not metal. Money is not paper. Money is not a computer screen. Money is simply trust. It is a shared story that we all agree to believe in. It is the invisible thread that connects a farmer in Asia, a banker in Europe, and a teacher in America. Money works because we trust each other. And that human trust is the greatest wealth of all. Hey there, just a second before you go. If you learned something new today, please give this video a like, write your thoughts in the comments, and subscribe to the channel. It only takes a second, and it really, really helps to create even better English videos for you. Your support means the world. Thank you.